I'm not a financial advisor. This is not financial advice. Please do your own research. Welcome to the VinnyGMarkets channel, brought to you by Vinny G Money. I hope everybody had a good week. Let's get right into it. The S&P 500 was up 0.98%. The Dow Jones up 1.26%. And the NASDAQ up 0.60%. And I was kind of half right about this. I said the 10-year Treasury would decrease and bring the overall market up. The 10-year Treasury actually increased, but the overall market went up anyway. So we did get lucky on this one, but we're going to take this luck. It doesn't always happen, but let's try to configure or try to make sense of why that might have happened. So the US 10-year Treasury, it did open the week at 1.5 and close at 1.61. And if you've been following this channel, that is a pretty big increase for the week, something more than we're used to seeing. And you would have thought that the markets would have went down with this. But what also could have played is the US dollar index. It did open at 93.80 and close at 94.12. But if you take a look at this chart, you see that we were at a high midweek at about 94.40. So the US dollar index did start decreasing throughout the week while the US 10-year Treasury just continued increasing. But the fact that the US dollar index went down could have helped the overall market. But what definitely helped the overall market was our cleanup hitter. You know what it is, crude oil. Crude oil opened up at 77.19. It closed at 79.59. It hit $80 midweek, and this definitely pulled the overall market up. It doesn't always happen like this, where if the 10-year Treasury is up like this, sometimes we would see the market go down. It didn't happen this week. The overall market went up. So the US 10-year Treasury, it currently sits at 1.61, and if we take a look at the junk bond rate, which is something we just started looking at, we see that that increased as well. It started at 4.23 and ended the week at 4.28. So the fact that the junk bond rate went up along with the US 10-year Treasury, that's telling us there shouldn't be any mass sell-off in junk bonds, and we went over the last video on why we might care about that. And what was also stated in the last video is we thought the US 10-year Treasury was going to go down once the US debt ceiling issue was resolved. And let's take a look. Senate dodges US debt disaster, voting to extend borrowing. And we see that some of these votes were Republicans, so they didn't have to go through that vote-a-rama. I was kind of curious to see what that even was. But I say every time we raise the U.S. debt ceiling, we should have a national celebration. People off from work, let's have a good old vote-a-rama, whatever that is. We could figure that one out. Because raising the U.S. debt ceiling has become like a national pastime anyway. But we see that this only is raised up until December. And what we say in the last video, they're pushing a lot of things off into December. This is just another thing. We got the Federal Reserve possibly tapering, the possible government shutdown, and now they're gonna have to vote on this debt ceiling thing again in December. And it looks like Schumer gave some type of rant following the vote to raise the debt ceiling, and McConnell was targeted and this and that. Mitch McConnell, he's already informed President Joe Biden that then him and any other Republican, they're not gonna vote to raise it in December. So we're gonna reach another freak show in December. I don't know what's gonna go on. But again, we have to be very cautious going into December, especially if the job report numbers get better. The Federal Reserve might start tapering because of that. And also now we have this debt ceiling issue that's lingering into December too. But what I also want people to understand is this is all done by design. All these politicians, they answer to the Federal Reserve, or at least a good majority of them, where the Federal Reserve is going to have them do what they want them to do. That's why I don't even care about pulling up what Chuck Schumer's rant was about. I really don't care. On the VinnyGMarkets channel, we just follow that storyline because we use that storyline to try to figure out which way it's going to move the markets. And speaking of fake, let's take a look at what was actually being tossed around as a solution to the debt ceiling issue. Apparently, we could mint $1 trillion platinum coin, and this could have been used to answer the debt ceiling crisis. Janet Yellen did call it a gimmick, but the fact that this is even possible, which it is, should show us the joke that our US dollar, what our money really is, that we could even do something like this. And if we take a look, the idea was floated before in 2011 when the government faced another debt ceiling crisis. Former President Barack Obama said in 2017 on the podcast Pod Save America that he and his advisors discussed the use of $1 trillion coin as a safety valve. There were all kind of wacky ideas about how potentially you could have this massive coin, Obama said in 2017 interview. I mean, it was some primitive, it was like out of the Stone Age or something. I pictured rolling in some coin. I mean, the fact that this is even possible it tells us again what a joke our money really is. But taking a look at some other reasons why the U.S. 10-year Treasury might have risen is because we'll take a look at the jobless claims report. Again, it was pretty bad, 326,000 people first-time unemployment benefits. But again, the media, they say this is good because it was below the estimates of 345,000. So the market, I guess, might have taken this as a good thing. And what do we say? When there's good economic news, that's going to raise the 10-year Treasury and bring the overall market down. But what could have happened was it could have brought the 10-year Treasury up, but the overall market knows that this really isn't good news. So again, it gets into the point of how's the Fed going to taper when we still have over 300,000 people per week filing for first-time unemployment benefits. And also we had the non-farms payroll numbers come out this week, and we see on the mainstream media, the CNBC's, it says 10-year Treasury yield pushes above 1.57 with jobs report in focus. So prior to the jobs report coming out, this is telling us that everybody expected this jobs report to be good. But let's take a look. We see 10-year Treasury yields rise above 1.6, shaken off weak September jobs report. So this jobs report was actually pretty terrible. If we take a look, non-farms payroll rose by just 194,000 in the month of September compared to the Dow Jones estimate of 500,000 the Labor Department reported Friday. And again, such a miss like this, it makes you wonder what these economists actually get paid for. But we also see that the unemployment rate fell to 4.8%, and that was better than expected than the 5.1%. So I guess that little bit of better expectations, that's what pushed the 10-year Treasury higher. Who really knows? But we do know that the September jobs creation number was supposed to be at 500,000. But it came short of just 194,000, a big miss. But as one might ask, how's the VinnyGMarkets channel playing this market? Let's take a look. The Facebook puts we sold at a $315 strike price. Those expired worthless today, well, from the recording on Friday. So we kept the premium on those. That's a winner. We have the Microsoft puts we sold at a $375 strike price. There was a decent recovery in Microsoft. The price is currently at $294.85. And the puts that we sold on Goldman Sachs, they moved up nicely. The current price is $392.81. We sold those puts with $335 strike price. Both the Microsoft and Goldman Sachs, they're with an expiration this Friday on October 15th. So we'll see if these stocks could hold even if there's a pullback in the market. Because I was going to say I'm going to hold off on selling any more puts. I think at some point this week we should see some type of sell-off or pullback with the 10-year Treasury this high. Again, I could be wrong, but I'll also tell you right now, I do love the price of Facebook at $330 when it comes to selling puts and put selling opportunities in Facebook. And also, let's take a look at the best performing sectors, whether it's 1 day, 1 week, or 1 month, is by far energy, followed by financials. And you know we've been speaking about that since the beginning of this channel, that we expect crude oil to go up, and that was going to bring the energy and financial sectors up. So when it comes to selling puts, we're going to try to focus in on those sectors as well, along with any other, individual stocks we might like at, whatever price they're at. But I also want to make a future video when it comes to long-term investing, because you're going to see a lot of these companies I like long-term as well, especially when it comes to Facebook, but we'll get to that at a later date. And speaking of higher interest rates, we see how it could be affecting the real estate market. We see as mortgage rates shoot even higher, refinance demand plummets 10%, refinance demand fell to the lowest level in 3 months, and also mortgage applications to purchase a home declined 2% for the week and were 13% lower the same week 1 year ago. And what I find interesting is when the mainstream media is talking about the Federal Reserve possible tapering, they're only talking about its effects to the stock market, that the stock market is going to go down, but nobody's discussing the effects it's going to have on the real estate market when the Federal Reserve starts pulling back, because we know on this channel that the Federal Reserve, they make a minimum purchase of $40 billion a month on mortgage-backed securities. So when the Federal Reserve is not there to make those purchases on the mortgage-backed securities, that interest rate for mortgages, they're going to rise, and that's going to affect the prices of real estate. No one's expecting it, but you know where you heard it first on the VinnyGMarkets channel, so we're going to continue to monitor that as well. And also we see the auto industry still not doing good. U.S. auto sales forecast to plummet in third quarter as chip shortage plagues industry. And not to say that this chip shortage isn't going on, but the real issue is it's the amount of money that we're printing. When we have all this extra money, 20% printed in the last year, chasing the same amount of goods. The prices of those goods are just going to naturally go up, and now you amplify it with a created chip shortage problem. Yes, it's a creative problem. They created that problem to draw the attention away from the amount of money being printed, but it does just amplify the issue even more. Again, the NWO doesn't care about that. They just want the people distracted and not focused on the amount of money that's being printed. And the truth is, too, people just don't have the same amount of money as they once did to buy new cars. But again, nobody wants you to focus on that. And we also see in this article that analysis predict vehicle supply will improve a little bit in the fourth quarter and continue to improve throughout 2022, but won't return to normal until 2023, if ever. Automakers have promised to keep lean inventories in the future to boost vehicle profits and prices, which have been at record levels. And that brings us into the fourth industrial revolution, because what is Nissan doing? Smart robots do all the work at Nissan's intelligent plant. Nissan's intelligent factory has hardly any human workers. The robots do all the work, including welding and mounting. They do the paint jobs and inspect their own paint jobs as well. And Nissan executive vice president says, up to now, it was people who had to make production adjustments through experience, but now robots with artificial intelligence analyze and collect the data are able to do it. The technology has developed to that level. Also stated in this article, all automakers are working on robotic technology that could increase adaptability and enable them to respond quickly to market demand. And this will eventually be the solution to the inflation of prices, because when you're using robots, you don't have to pay humans, so they could bring down the cost on a lot of these goods. So I hope people following the VinnyGMarkets channel is starting to see this trend into the fourth industrial revolution, because by the time people wake up and need or want to go back to work in order to make extra money, they're going to realize that the robots, drones, algorithm, AI, they're going to take over the working industry. And when it comes to inflation, the Federal Reserve freak show came out in numbers this week. We first have this creature. Fed President Charles Evans sees inflation falling below central bank's 2% target. So this creature talks about inflation falling, even though the freak show ringleader, Uncle Jerome himself, came out last week calling inflation frustrating and sees it running into next year. And also we had creature Fed President of Cleveland, Loretta Mester. She came out of her cave this week, says U.S. inflation mostly driven by pandemic-related factors, an increase in medium and long-term inflation expectations paired with a continued rise in inflation could be a sign that price changes are being driven more by higher demand than policymakers anticipate. However, the Fed official will have a vote next year on the Fed's policy setting committee, said that this is not her baseline forecast. Well, thanks a lot. Why even come out saying anything? Just causing confusion to the markets. And we also have this thing, Janet Yellen, our Treasury Secretary, sees inflation staying higher for the next several months, and she trusts the Fed to make the right decisions. Of course, she trusts the Fed to make the right decisions, because where did she work before she was the Treasury Secretary? That's right, for the Federal Reserve. There should be a conflict of interest, but the Federal Reserve knows the masses have no idea about any of this, or even care that the Federal Reserve took one of their own people and just dropped them in the U.S. government. So you see, we have 4 different people with 4 different statements about inflation this week, and all 4 of those people work or have direct ties to the Federal Reserve, and that could have caused the confusion to that U.S. 10-year Treasury in the bond market. And speaking of Federal Reserve integrity, we brought this up in a prior video, but I want to bring it back up. We had Eric Rosenberg and Robert Kaplan, 2 Fed presidents, basically caught insider trading stocks while the Federal Reserve was pumping the market. And Jerome Powell says he wasn't aware of specifics behind stock trades made by the top 2 policymakers. Of course he wasn't aware, because Uncle Jerome himself got caught owning securities that the central bank bought during the pandemic. And even though the chairman himself, Jerome Powell, got caught, we see that it's still Fed Chairman Jerome Powell is the one to review trading rules after central banker stock trades raise eyebrows. So this is like the movie The Departed, where Matt Damon was given the task to find the corrupt cop in his unit when he actually was the corrupt cop. Sad thing is, this is actual reality and is corruption on the highest level, when the people who control our money supply are also insider trading. And also keep in mind that there was no disciplinary action taken. The 2 Fed presidents, they did resign, but the Fed chairman Jerome Powell, he's still in office, and everybody got to keep their profits. And another creature came out this week, St. Louis Fed President James Bullard, and he basically said U.S. businesses are going to have no problem raising prices on customers to beat inflation. It says Bullock's business contacts in his Fed district and around the country typically say, don't worry, my company is going to be profitable because I'm going to raise prices, and we've had no difficulty raising prices in this environment. And we already have CFO of PepsiCo says more price hikes could be on the way in the first quarter, and also says other consumer packaged good companies like Procter & Gamble and Pepsi rival Coca-Cola have also been raising prices to offset the blow from higher costs, which are eating into profits. And we see that this is also covered in this Reuters article. Consumer good companies walk a tightrope as inflation surges, and we see Levi Strauss, they're hopping on the bandwagon, telling investors the way they're going to offset the rising prices of raw materials is they're just going to increase the prices of their goods to the consumer. So we see that big corporations are well prepared for ongoing inflation, but we have to ask ourselves, is the average Joe well prepared for ongoing inflation? And speaking of inflation, we have crude oil this week up big time at 79.59. And why did it go up this week? As we stated in last week's video, we knew OPEC had a meeting about their production. They kept the production at 400,000, so we know that was going to boost the price of crude oil. Also, we had an oil spill in Southern California, and Marathon, Texas refinery, they had a day-old oil leak, and even with the oil leak, Marathon, Texas refinery still enjoyed a good week for their stock, up over 10%. And even though there might be short-term pullbacks, you know I remain very bullish on crude oil. And real quick, the Federal Reserve reverse repos this week, they were all between 1.3 and 1.4 trillion in that range, so we'll continue to monitor that to see whether it goes up or down. And with everything going on with inflation, we still see that the U.S. economy is still shrinking. U.S. trade deficit hits record $73.3 billion in August. The U.S. trade deficit increased to a record $73.3 billion in August, as a small gain in exports was swamped by much larger increase in imports, so that's just not a good combination. And just to go over the crypto market real quick, we see Bitcoin and the rest of the market is up pretty big. We know it's the first week of the month, so Bitcoin is needed as collateral, which could create a buying pressure. We see Tether did pump a little bit, but we're still stuck at that 68 billion. USDC is slowing down a little bit on the upper range of the 32 billion, but we do see Grayscale make big purchases this week. Started at 43.6 billion, ended at 48.6 billion, so about 5 billion in purchases for the week. And we have MoneyGram partnering with Stellar and USDC for blockchain-based payments, and this is interesting because this is adoption for real use cases. And it's also interesting because back in March, MoneyGram ended their partnership with Ripple, which is XRP, most likely because of the SEC investigation on XRP. But at the same time, USDC just got subpoenaed by the SEC, which is also involved in that MoneyGram partnership. But that subpoena is an actual joke because the United States government themselves already use USDC as a stable coin to bypass Venezuela's president in order to get money over to Venezuela. But all these subpoenas and SEC investigations, that's all about bringing regulation into the market. This market too, the cryptocurrency market, it's totally controlled by the Federal Reserve. So this is all just a show to eventually bring in whatever regulation they're looking for down the line. So we did go over a lot this week, but at the VinnyGMarkets channel, we stay put in that work. Our hustle game is strong, so come mess with your boy. If you like what you hear, Hulk smash that like button. And as always, I'll leave everybody off with this. The God of the Bible, the God of Abraham, the Father of our Lord and Savior Jesus Christ is real, and may He bless you.
It can't be done. It could be through taxation. There are a number of different ways governments can attack Bitcoin, and the even bigger threat, in my opinion, is CBDCs. I said this yesterday on the panel that I think central bank digital currencies were concocted in hell by Satan himself. They are incredible control by governments over everybody's bank account, and they are they're going to create a void of privacy for every individual citizen. I think they're horrible, but I think that's where they want to go.
It is a pretty terrifying concept if you keep in mind that the government will be able to know every single time you transact, every dollar, every cent, every time somebody pays you, every time you pay somebody. And I guess more problematic is the fact that they can cut you out of a digital system if you don't behave. And that's something we could be seeing from the People's Bank of China. But back to the idea of digital currencies from central banks.